Is China, generally speaking, investable?
Oh, of course. Yeah, very, very much so.
For the very simple reason of its size of its economy and its population?
It's an important market. It's I don't know why it would not be investable. I mean, if given what we do, we're global macro, right? So we're not investing in technology firms or firms that would be on the you know the on the list of companies not to invest in. So we're not doing that sort of thing anyway. So if we are buying, Chinese government bonds or different commodities in China or the equity market, when we buy the equity market, we're creating a basket of stocks that represents the economy, right? And so it's 100% invested.
Sure.
Investable, yeah. There's no restriction.
And what is your assessment of the Chinese government's recent stimulus policies with regards to the economy?
Well, it's obviously a favorable move. I think the first thing is that there's a recognition that there was a problem that needed to be addressed, and so that's good. And because if you don't recognize the problem, you're not going to do anything about it. So the problem, as we view it, the problem has been actually inadequate nominal GDP. Typically the attention is on GDP growth, which is real GDP growth, around 5%. But nominal GDP growth in China has been only like 3.5%. And that's just that level of spending is way too low. And that's why they have deflation. So the combination that basically the low nominal spending leading to deflation then is bad for sentiment. So it's self-reinforcing. It's bad for, makes debt problems worse. It's bad for corporate profits because nominal spending is nominal revenue for companies, and then they have to cover their costs. So deflation is really a bad situation to be into, but the root cause is really low level of nominal spending. So we still haven't. So the moves that they've made so far are good. The most of the impact has been on the financial markets. Not enough time has really passed to see whether they'll achieve the goal on the real economy. But probably more will be needed, and my guess is that they're just moving at a gradual pace to make sure that they don't overdo it, because they've already learned that lesson of overdoing it.
And over the next 4 years, do you think investors need to diversify more broadly?
Most investors, yes. Like I said at lunch, I think that global diversification is probably one of the most important opportunities today for investors, because actually the geopolitical problems that are producing and the deglobalization and the kind of countries focusing on their own circumstances and to some degree protectionism and so forth, it is actually creating bigger differences in economic conditions across countries, which is less efficient. It's more inflationary, but it produces lower correlations across markets. And so it's an opportunity to get diversification.
So diversification across geographies, diversification across industries and sectors, or diversification across asset classes, or a combination of everything?
Well, you can get diversification of industries and companies within an economy, right? But within an economy, you're sort of stuck with one monetary system. And that monetary system is what drives risk premiums and discount rates in that system, which has a pervasive effect on all the assets in that economy. So you can't really diversify exposure to discount rates and risk premiums within an economy, but across economies you can. So across monetary systems, if you've got a much more accommodative, easier monetary policy in one country, then discount rates, risk premiums more likely to fall. If you've got tight money in another country, maybe they're going to rise. And so that gives you the ability, cross-country diversification gives you the ability to diversify the exposures to discount rates and risk premiums. And in particular, we think in terms of three primary monetary systems in the world. There's the dollar, the euro, and the RMB. Those are the three biggest economies. Those are the three regions, North America, Europe, and Asia. And in particular, the Asia system and the RMB system is much less correlated than, let's say, the dollar and the euro. And so it does actually, Asia does present a unique diversification opportunity, and particularly China actually presents a unique diversification opportunity in relation to North America and Europe.